Hello all, I hope you're well, and I'd like to welcome you to the FinTech Finance Virtual Arena, where I'm hosting you today. We're going to be discussing payments ecosystems and how it's going to be impacted by the coronavirus, with none other than Ad van der Pol, the co-head of product management, the Global Transaction Services, GTS, EMEA, Bank of America. And now, Ad, we've had an interview before in the real world, but for our viewers who may have missed that, can you give yourselves a bit of a background to your role at Bank of America and how you've seen payments change since you joined?
Sure thing. Hi, everybody. Enjoyable to do an interview in this manner. So I head up product management in our transaction services, and that means I focus on payments, receivables, FX, liquidity, bank accounts, commercial cards, and our famous channels, electronic banking channels. In our instance, they're called CashPro, obviously. Yes, and there've been a lot of changes over the recent years. One of the most obvious one is digitization, and that of course is emphasized by the pandemic at the moment. But that is something that's been going on for a very long time, and I would say not just about digitization of the payment, but very much the digitization of the entire trade that sits around the payment, right? Or actually, the payment sits at the end of it, and where maybe we initially were just focused on digitizing the payment component of it, we're now very much, and our clients are very much focused on digitizing the whole trade component of it. And again, when I say trade, I mean it in the broadest sense, right? In the business to business, business to consumer, towards the government, in any sense, really. And so that then also leads to changes on the payment side. And I think that's what we're seeing today, that there's much more focus on how it fits into the digitization of the entire trade. And that's just one thing. Of course, we also have the consumerization of things, right? Everything needs to be easy to use, very customer friendly, and pleasant to use, really. And also the globalization of the entire world is going on. So that also means for payments more and more. And let's not forget regulation as well, right? We need to make sure we are compliant, we are transparent, we show visibility, and we're doing the right things. And I'd say those are the key components of the payment changes in the landscape.
Yeah, I mean, that's quite extensive for an industry that categorized itself for not changing for maybe for like the last 20 years. And then suddenly all of this that, as the fintech buzzword, Internet of Things happened, and here we are. I mean, now, obviously, those are all the really exciting developments that have been happening over the last maybe half decade. In the last 3 months, we've seen an incredible change and shift in payments, the likes that probably no other industry-wide event has ever caused. How do you think the pandemic itself has changed the very nature of the payments industry, from your perspective, and obviously across the industry?
In a weird way, it is exciting, right? Because this pandemic is impacting our clients, right? And so we're looking at, all right, what impact does it have on our clients, and how can we help our clients? One of the key things that comes up is that our clients are very focused on business continuity, right? So the business continuity component is everywhere now because everybody's working from home, everybody's working, accessing their systems from remote, and also need access to the banking systems from remote, obviously. The other thing is there seems to be a much stronger connection to working capital. I mean, we've always talked about working capital, right? It's been part of the conversation of Transaction Bank for years and years. But I think now it's much more visible than it ever was before. You look at the impact the pandemic has on certain industries, right? You think about airlines or more travel and hospitality, the retail side of things. I mean, they have struggled to continue their revenue levels at the same levels before the pandemic. So all of a sudden, accessing working capital, accessing available liquidity is incredibly important to them. And it actually shows how important it is to have efficient payments and receivables processes in order to have a good handle on that working capital. Right, so that's another component that is much more prevalent than it ever was before, and it's much more obvious that those two things are linked together. On the other hand, you've got industries that are actually benefiting from this pandemic, right? I mean, the e-commerce side of things, pharmaceuticals, media, technology, they see their number of transactions going up. So they have quite the demand for actually us being able to deal with a larger volume, right, at a acceptable cost. It just emphasizes everything and the different components that we were already doing, but it just emphasizes certain things. Again, being able to process those volumes speedily and, of course, properly, and linking it with working capital and being able to support our clients from a business continuity perspective.
Well, I mean, that is quite the extensive view. That's incredible. And going back to your first point before we maybe dive into the second one, the working from home aspect, obviously that when it comes to payments, suddenly you've had very large transactions being carried out from people's homes, whereas before it would have obviously been with the Treasury Department. How is that going to change payments going forward? Do you think that's going to restructure the ecosystem so there's more of a focus on KYC than innovation?
Actually, it's interesting that you make that split. I actually think there is a lot of innovation to achieve within the KYC context, right? But you're absolutely right. There will be, and there should be, focus on KYC. There should be now, and there should be in the future. It's just different ways of doing the KYC, right? So, yes, we were already, as an industry, probably, and together with the clients, moving to a situation where we could have digital documents, we could have electronic signature. We were also already moving to digitization. But if I look at our own examples, we use digital signatures in certain areas of the globe. We were just rolling it out in Europe as well. And all of a sudden, because of this pandemic, we had to fast track that rollout, which we were able to do, right? So clients very happy, of course, because they all started working from home as we did. And now they can they go to a secure area where they can exchange digital documents with the bank for KYC, for account opening. They can sign them there digitally. And so that is definitely, I guess, a benefit of the pandemic, that is now, the acceptance of using e-signature is significant. We see a year-on-year growth globally of 327%, to be precise, of the usage of e-signature. Yeah, exactly. And even between February and April in the region, in Europe, we saw an increase of 211% of use of electronic signature, right? So it really has picked up because of the pandemic. And in the end, I think using digital document exchange and using e-signatures will be the new norm for all of us.
Excellent. And I'm kind of going to segue out of finance for a bit, just because of the very nature of payments is embedded in everything that we do. And so, being able to offer up this kind of e-signature technology that's just embedded in a customer's dashboard effectively, is this going to change the way, and obviously we don't have to spend too much time on this, but is this going to change the way that people are ultimately going to work now that there is that level of security to literally just sign documents on the go? Is the office dead effectively?
From an administrative perspective and process perspective, I would say yes. There's still a lot to do, right? And preferably there's more standardization around the documents and the document exchange. It's now still very bank specific or industry specific. But conceptually, absolutely. The office will primarily be used to have that interaction with your colleagues and potentially your clients. But you no longer need to be there for documentation. I'll take it back to payments and talk about checks, for example, which I know sounds very old-fashioned, but there are still countries in Europe that use checks, and we still service checks for clients. And we kept processing checks during the pandemic, to be honest, right? So we've been able to do that. But what we've noticed with those clients is, on the client side, they need to sign those checks before they send them to us and we process them. That signer is working from home while the checks are arriving at the office address, right? And then sending them back and forth. And we had postal delays as well. So think again to my earlier point about working capital. Before that check is processed, right? The time it takes before the client has access to that money to their working capital, that just takes too long, and people are realizing that, and we therefore obviously have seen an enormous sharp decrease in check usage because of that, and we expect that to remain that way after the once everybody goes back to the office.
Yeah, I mean that's so interesting hearing that the pandemic has caused a technological shift that has then created a cultural shift. I've heard countless stories of people's parents and grandparents finally migrating to digital because before it was something scary, then it became necessary, and I think that's a really interesting development. Speaking of working remotely, continuing that trend, what are Bank of America looking to do to improve the customer experience? We've talked about obviously the security involved, but for instance, can you tell me a bit more about your Cash Pro app and how that enables customers to access all their finances but digitally?
Definitely. So, and the app is probably one of the most exciting developments we have been doing over the last few years, right? I mean, you can do there, I would almost say, the standard things nowadays, right? So you can view your credit and your deposit balances. You can view and you can initiate and authorize payments, obviously, and we'll use mobile tokens to do the secure authorization. You can view and confirm FX trades. You've got messages, notifications, and all of this is also available on the Apple Watch, right? So we've got Cash Pro app on the Apple Watch, which is great, obviously.
Wow.
But I think the most important thing in this situation is that actually we've got a lot of administrator functionality on the app, right? Where an administrator can manage the users to the Cash Pro, to the e-banking system, and the users to the accounts, and so on, right? So, and they can change and reset password. They can open up access for users. They can manage them there. They can set out tasks there. And I think that is actually, in this current situation, again, going back to business continuity, the key thing to be used in that app.
Definitely, I imagine. It's interesting you brought up the Apple Watch because my memory of it, obviously being a host of a show, is it may have even been you, Ad. So I'm sorry if I'm throwing you under the bus here, but we were conducting an interview and an application on someone's watch started ringing during a live interview, and it's something that you don't actually think of because it's so embedded in people's daily lives to turn off your watch. But how brilliant is it that they can now access their finances that quickly, and kind of moving away from that customer experience and the application, and looking at the industry as a whole. Where is the future of international payments? I mean, that has changed massively because of the pandemic, but we're looking at adoptions of ISO 20022. Where is the international payments industry going, and is it a positive outlook despite the pandemic?
It's a good question. Again, it has to do with globalization, which I think from a payments perspective and a trade perspective is still happening, right? This ISO, we should have come up with a better name, right? Because it is such a foundational change to our industry, right? So we'll be saying ISO 20022 XML format for years to come, and we should do a prize for somebody who can come up with a better name. But anyways, the trick is with deploying that, we get a lot of richer data in a structured format, right? And so that will automatically achieve efficiencies. It will achieve better transparency and therefore compliance. I think the challenge at the moment is that those ISO developments that we see everywhere are done within the context of a specific market infrastructure, for example, Target 2 or CHAPS, right? And they're now focused, obviously, on benefiting that specific market infrastructure, which is great. But the real advantage is going to come when those infrastructures are going to be interoperable from a payment processing perspective. And I think it was Swift who said that they're expecting 80% globally to have that connection by 2025, right? And I think once we achieve that, we will see banks, payment service providers, other financial institutions, but also corporate clients, companies, innovating on top of that enriched, structured flow of data. And I think that's when it becomes really exciting. But we're laying the foundation right now, and that's why this is such a foundational change, and such a shame we have such a poor name for that foundational change.
Yes, you know what? I think I actually got it wrong in my question. Um, so I mean, there's a lot to unpick there, because obviously with the influx of data that's coming across from the instant messaging effectively of these payments. I mean, what does this mean for the consumer? Does it mean that their payments not only are quicker, but they have higher transparency?
They will definitely, both of those in the end, right? And I think the key thing, well, there's a lot of benefits for many stakeholders in this chain. In the end, the key thing is for the client. So to your point, could be the consumer, could be a corporate, right? I mean, the consumer doesn't need all that information that is possible within the ISO, but a corporate does, right? Especially to help them with their reconciliation and matching all the incoming payments and the outgoing payments. But also the regulator, right? The regulator will see a lot more, the transaction, end-to-end transaction becomes a lot more transparent. If you imagine that in an international transaction, there are many players involved in moving the transaction from A to B, it's important to keep that transparency, that by the time it reaches B, that the data that was there with A is still there, right? And ISO is going to give us that option to have that, and that's the key thing, really. And then anybody can do anything really based on that data.
Incredible. And you were talking about interoperability, and we've actually had a discussion with this earlier in the virtual arena about how the real-time payment systems around the world will eventually get to a point of interoperability. And is that what you were saying will hopefully happen by 2025, or is that way off?
I think that's a bit further off, I would say.
Yeah.
And we'll see initiatives from fintechs and payment service provider to cover the gap in the meantime, right? So there will definitely be functionality there. I think right now that interoperability between the schemes, once that is achieved, you're right, it will achieve or it will lay down the foundation to do cross-border transactions easier. Whether that's translatable to the consumer, I'd say is still up for discussion, but definitely for corporates, right? And yeah, again, it's foundational for our industry.
Definitely. And we've had a very global outlook in this conversation, but I want to bring it back down to our home turf. What's happening with the Target 2 migration, and what's that going to mean for Europe and payments in particular?
I guess the key thing is, because SEPA is already based on ISO, right? So we're going to have consistency between those different clearings, and we'll have alignment in both domestic and cross-border payment processing, right? And I think that's the key benefit. Unfortunately, I'm going to make it a bit more global again, because you realize that the euro is the second most traded currency in cross-border traffic after the dollar, right? So the dollar, I think, is about 41% and the euro is about 33%, right? So the fact that we're making this change in Target 2 is actually going to benefit not just Europe, but everybody who's trading euros, right? So it's a global. It will have a global impact, and then to recognize that Target 2 is the first of the larger market infrastructure to move to ISO, right? And who knows? Maybe it'll draw people to do more euro transactions because of the efficiency of the payment processing.
And is that coming about from cloud-based technologies rather than just a simple internet connection?
That's an interesting question. I'm not necessarily sure it's from cloud-based because of the cloud-based piece, but you're right. Let's say the new technology developments, right, will definitely lead to access to European payment processing from the outside world. Absolutely.
Sure.
Yeah.
Brilliant. And kind of continuing on from that digital innovation that we're seeing in payments, from cloud-based technologies, but more specifically digital tools. How's that going to help with the cash flow forecasting of your customers? Because we have talked about how the customer experience can improve, but in the specific way, how's that going to help cash flow forecasting?
Yeah, no, that's an interesting one, especially because cash flow forecasting has been on the top 5 demand list from treasurers for years and years, right? And it's still there. You ask treasurers what is important to you, they'll say cash flow forecasting, because it's such a difficult thing to do, yet it is so important, right, to know what is coming. You would reduce the time to compile and compute all the data that feeds into the cash flow forecasting, right? So you'll be there quicker. You'll be able to be more accurate in your predictions, right? Because of all that data you have and the computing power, you will then be able to do more specific modeling on your company or on your industry or any specific area you're focused on. Simulations, you will be able to do a lot more what if scenarios, right? Because that will help you determine whether you need more funding at some point in time or whether you can use investment opportunities. Another one is treasurers will always have certain covenants and pledges in which way they manage their treasury. Do so much in that area, do so much with that partner, some kind of controls. This automated cash flow forecasting will then help monitor all those controls and all those thresholds and all those limits, right? So you don't have to check all that by yourself, or you have less risk of duplication or clashes, or so there really is a lot of benefits on the cash flow forecasting side, and so we're eager and looking forward to what all the new technology is going to bring us in that area.
Well, it sounds absolutely exciting. Ad, I think this is all we have time for. So thank you very much for joining me. To all our viewers, I hope you've had a great time. And obviously you can catch the rest of the series and the rest of the virtual arenas at www.fintechf.com. And obviously our previous interview with Ad and myself over in London. So thanks for watching, and I hope to see you in the next episode. Goodbye.